Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And I have some exciting news for everyone today, because for the next few weeks, we're going to be doing something a little bit different with the show, putting a pause on the ongoing Becoming Buffett series we've been doing in the podcast, because on June 27th and 28th of 2017, just a few weeks from now, we're going to be having our mid-year DIY investing summit in partnership with Seeking Alpha. And it's going to be an exciting summit. We're going to have a lot of top some of my favorite investors from Seeking Alpha are going to be a part of this summit, and we're going to have all kinds of topics, everything from what their favorite picks are, specific favorite investments are going forward from here, how they're shaping their portfolio for the second half of 2017, how they're hedging their portfolio in light of markets being at all-time highs, as well as how they go about identifying major trends and how do they identify companies to invest in, how do they research them, how do they make buy and sell decisions, all that stuff and more. So I hope you enjoy this preview of the DIY Investing Summit, and you can register for the summit for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com for your free registration. Well, hey, Mark, welcome back to the DIY Investing Summit.
Hi, Brian. Thanks. I'm glad to be back.
What was your biggest victory, or some of your biggest victories of 2017 so far? And I think you've already hinted at them a little bit with
sure.
Nvidia.
Well, Nvidia, yeah. I mean, they're besides being up over 300% since I bought them, I think the personal victory for me was not giving into the urge to sell them after their earnings report in February, which was their fiscal Q4. They did have a sell-off. The stock dropped quite a bit, and there was a lot of negative market sentiment about them. That, well, they've kind of, this is kind of peak Nvidia, and this is as far as they go. And they've got a lot of competitive pressure on them from AMD and from Intel, and there were a lot of people saying, you should just take profit and get out now, and I held, and I'm glad I did. Well, because I didn't believe the negative sentiment. I thought that their long-term potential was much, much stronger than people realized. And I'm trying to look 5 to 10 years out when I make that kind of an estimation. So I held, and now the stock's recouped the earlier loss, and they're up 34% year to date. So I'm happy.
Absolutely.
And I'm certainly not going to sell unless something dramatically changes in their business prospects, which I really don't see that happening.
Well, let's use Nvidia as a bit of a little case study here, because you bought it, it's up 300% since purchase, and that's roughly within the last year, which is obviously an astounding performance in 12 months. Yeah. And so you look back on it, and now it's easy to say, well, yeah, you look back on it, and obviously, it had all these good things going for it and whatever else. But let me think. There's several ways to think about this. Because there are obviously plenty of companies that, you can look at and be optimistic about and then don't work well. When you look back on that Nvidia purchase, are there any lessons you take away that you want to keep with you as you're looking for more stocks in the future? Does that make sense?
Well, I'm trying to make sense of it. Okay. I think, are there lessons learned? Yeah, sure. There's definitely lessons learned. And I think the key lesson was kind of a validation of a fundamental thesis that I have about what's going on in semiconductors and in PC processors in particular. That I've had this concept of what I call the paradigm shift, which is that we're moving away from the PC model of commodity manufacturers like Intel and AMD making processors that are just kind of generic, and then OEMs throw those processors into boxes, and voila, you have a PC. We were moving to a model that I think was pioneered by Apple, which was the device maker actually designs their own custom processor. And they don't build it themselves, but then they ship that design off to a silicon foundry like TSMC, and that's how it gets built. There are advantages there, but the main thing is that it's vertically integrated, and the the device makers have a lot more control over each level of the technology going into their devices, and that model has kind of taken over the high end of the mobile device market now. Intel tried to sell into the smartphone market for a couple of years, 3 years, got absolutely nowhere with it. The commodity model does work, but it only works at sort of the mid to low end. So my lesson learned was that theory that I had continues to be a powerful way to analyze and assess the prospects of technology companies. And that's especially true of Nvidia, because Nvidia, I think, is a great example of a commodity chip maker. And they were a commodity chip maker. They were basically just building chips. Well, they were fabless, but they were just basically designing, building chips, and then selling them to OEMs, their GPUs, their graphics processors. And going from that commodity OEM PC model to something that looks an awful lot like the new paradigm model of Apple. And how did Nvidia do that? Well, what they did was they started doing an awful lot of software development. And the software development became a key discriminator for their chips. And it allowed them to open up new market opportunities. And one of the most important new market opportunities was the data center and what's now called deep learning AI, and which has become actually incredibly important to most of the cloud service providers. And that's like Amazon and Google and Microsoft and everybody. So by integrating software and hardware, which is key to the new paradigm, because you're not just selling chips anymore, you're selling some integrated package, which has a significant software component. They were able to create new markets for their products, sort of start to shift away from the old style PC model, and that's been key to their success and to their growth.
So tell me this. I love this. So basically, summing it up, as you're saying, like you identified a shift, a significant paradigm shift, a major theme, and then you found what company is poised to capitalize on that theme, and that was Nvidia.
Yes,
and you were right.
Exactly. And there are other companies, I think, that are potentially out there. I may not have identified them yet, but which are out there doing kind of much that same thing. So that's kind of one of the important ways that I evaluate these companies, although not the only way. And not every company has to fall into that mold, but if they do, then that gets my attention.
Well, I hope you enjoyed this brief interview preview from the DIY Investing Summit. And if you enjoyed anything about this and found any value in it, I assure you will thoroughly enjoy the full interview. And you can register for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com. And free registration, and then the summit goes live on June 27th. And so look forward to seeing you there. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.